All right, let's talk about Rivian, another interesting play in the EV market. This article is coming from Benzinga. Rivian leads EV startups, but will the stock move higher? So Rivian shares rocketing higher in after hours action. So they reported earnings a couple of days ago, and they reported a narrowing loss. As a result, the stock popped 10%. The takeaways from the earnings call was that given the string of price target reductions, they view the news as a turning point for the company and a bullish catalyst for the market. Analysts rate the stock a solid hold, which is down slightly year over year from a moderate buy, with a target price at $27.65, 100% above the current price action. So I'm going to write that target down. 27.65. Okay. The company reported 661 million in net revenue for a gain of 600% over last year. That's slightly below consensus of about 4.25 million. All right, it's not much. Liquidity is another factor helping to support Rivian share prices. Not only did the company control its cash burn during the quarter, but further improvements are expected, and the balance sheet is still well capitalized. The current rate of 535 million, Rivian could continue to operate for several years without recapitalizing and will likely reach profitability before it needs to. Now, I didn't trust the numbers. I actually dove a little deeper. And I do remember a couple of months ago the stock crashing because they were seeking out more money in return for debt. So this article is coming from CNBC. Rivian shares fall as EV maker looks to raise $1.3 billion. All right. So it appears that they did raise the money, the extra money that they needed, right, to help fund development and launches upcoming smaller R2 series of vehicles. They weren't hurting for money. They were just, adding that additional cushion, right? The EV maker had 12.1 billion on hand at the end of 2022, and it said it has enough capital to operate through 2025, which is consistent with the first article that we read. All right. Now, Rivian is different than the other EVs out there. This is coming from Inside EVs. Is there a future in hydrogen? So EV's take on the EV market is hydrogen based. All right. So the difference between EV versus hydrogen. In an EV, you got your battery electric vehicle. Its propulsion system is relatively straightforward. The battery is the energy source, and the electric motors utilize the energy for propulsion. Now, it gets a little bit more complicated when you talk about hydrogen, as there is a chemical reaction that creates the energy to drive the car. Hydrogen is inserted from the onboard tank on one end of the fuel cell called the anode. At the anode, catalyzing reactions occur, stripping an electron from the hydrogen on the cathode. Oxygen filtered from the environment attracts the positively charged hydrogen to form water. While the hydrogen travels across the cathode, the electron is sent through a circuit which generates electricity. However, there are drawbacks. The most prominent in America are the lack of infrastructure and expensive fueling costs. So the only hydrogen fueling stations right now are in Cali. So unlike EVs, you have Tesla that built out their EV network, and potentially in the future you might have other EV companies drawing and charging their batteries through the Tesla network, possibly, right? But there is no infrastructure for hydrogen cars, so it's kind of like, why buy one? Then you also have the cost of the hydrogen. A kilogram costs between $10 and $12. Now not sure how much a kilogram of by weight gasoline costs, but just for comparison purposes. And I don't know how much hydrogen you need to fuel. Let's see here. This means it would cost between, okay, say $100 to go 380 miles. Yeah, that's a bit expensive. Now, on a good note, Rivian does have backers, one of which being Amazon. This is from Clean Technica. And so when Rivian went to the public markets through the IPO, Amazon invested roughly, I think it was 10% or 1.3 billion into the company to gain exclusive rights to their van. Now, part of that agreement was Amazon would purchase up to 100,000 vans over the next 4 years, with a promise of only a minimum 10K in any 1 year. All right, so let's look at the numbers from a fundamental standpoint. Very consistent with what we saw in the first article. You know, revenues are growing, but it's costing them, right? It's all about economies of scale. So operating income continues to go down. At some point, there's a break even, right? And this chart is showing that in the future, as they gain economy of scales, the operating income, net income will increase. Maybe the capital expenditures will decrease over time. Very similar to Tesla. Right now, they need the capital to build these gigafactories. All right, operating cash flow, again, increasing. Free cash flow also increasing because they're in growth mode. Now, the difference between operating cash flow and free cash flow is operating cash flow is the amount of money you have to pay your bills. Free cash flow is after you pay those bills, how much money do you have remaining? All right. Won't get into the efficiencies because they're in growth mode right now. So all these fundamental efficiency metrics are going to be shot. All right. Profitability kind of makes sense, right? They score 21 out of 100. Again, they're in growth mode, so they need to invest. Now, from a solvency standpoint, meaning do they have the capital to survive? They got a score 52 out of 100, which is okay. But they score high in the short-term solvency, negative net debt, low debt to equity, and long-term solvency. And that makes sense, right? Because we saw that they have about $12 billion in cash to fund this operation. All right, Wall Street estimates now over the next 12 months. You got a low of $11. You have an average of 24.28, right, which was consistent with that first article we saw where they had a target of 27.65. And you have a high of $42. That's not happening. That represents more than 2x at current levels. All right, so let's go to the charts. See what we're cooking with. So again, we got $11 on the low side. We'll just say 25 on the high side and 40 or 25 on the middle, which is more reasonable, and 40 on the high. All right, just to round things off. All right, I guess I did a video on Rivian in March. All right, so we have this is the let's go to the monthly chart first. And you can see just on the monthly chart. Wow, this is an ugly chart. Now I remember when they went public and the stock shot up. and I didn't really know why. Um, I guess that was the craze, and you had helicopter money. But it went public. Um, don't remember what. Let's see. All right, it went public at 106, shot up to 180. I remember that. Um, and now finds itself at sub 15. All right, let's go to the uh, weekly chart. And this was kind of evident. You had support, right, at double bottom, now serving as resistance. All right, that was a no-brainer. Opportunity to short, that is. And you have all right, so you have positive divergence. You got a lower low on the weekly chart, but you got higher highs on the RSI. So potentially a bottom is in at the roughly 1166. Potentially. I would love to see a close on the weekly chart above $16. For me to say, okay, it's now a viable opportunity to look to go long. Rivian. All right, let's go down to the daily chart. And you can see those candles a bit better. Had a low back in January of this year. Retested in March. Retested in April. And recently retested on the 11th of May. Now on the upside, you have more resistance at the $22 level, right? These wicks indicate selling pressure. All right, so the articles had, in the next 12 months, had about $11 target, still in yellow, on the low side. Realistic target, it had about $25, which would mean price would have to breach the selling pressure up above near the $20 level. And I'm going to zoom out. And the upside had a target of roughly $40. And that's not going to happen. All of that comes in again as resistance. So I like the levels for targets as that coincides with resistance. Short term though, next 2-3 months. Let's go back down to the daily chart. Even on the daily chart you can see positive divergence, got lower lows, but you actually formed a high low on the RSI indicator. So is this the making of a bottom? It's possible. Hard to tell. Yeah. So on earnings, when the stock popped, it was an opportunity to go short. Right, as price ran into resistance, and then the rest of the day kind of sold off. Okay, so here's the reversal confirmation that we're going to be looking for. When the up days, volume wise, starts to exceed the down days As you can see, these red bars, that's heavy selling. But when you start seeing the up days, heavy buying, kind of trump out the hard selling days, that's when we reach the bottom. Now, for some reason, I had this yellow horizontal line here at $10. Let me zoom out real quick. Maybe in that last video I did in March, that was my target. We'll see what happens. It's hard to tell where price is going, but volume will be the best indicator, or one of the best indicators. Again, if you get a close above 16, either on the weekly or the monthly, that will be another indicator that the bottom is in. Thanks for watching. Subscribe. Please like the video.